All right, everybody, welcome back. So in this video, we're going to talk about the Keltner channels. This is a continuation video from the TMV series. So what we're looking at right now is the Keltner channel, the way that we know it today. But it wasn't originally designed that way. So let's go through how it was designed and how much it has changed over the years into this that we have now. I'm going to overlay the old one. So these white lines with the light purple middle, that's the way that we would normally use a Keltner now. And here is what the old one used to look like. And you can see how it's more responsive in a way, but it also it's got its own issues, right? So kind of both sides. Let's take the old one and just show it by itself. So that's the old one right there. What is different about it? So in the 1960 book, How to Make Money in Commodities, Chester Keltner introduced the 10-day moving average trading rule. And he is credited with the original version of the Keltner channels. It started with a 10-day simple moving average using high-low close divided by 3 as the center line, right? So they took high-low close divided by 3 over the last 10 days. They used that average and got that cyan line in the middle of that channel, right? This here. And then to get the edges of the channel, they used the high and low, high minus low, and they took high minus low and added it to that cyan line to get the top number, and high minus low and subtracted it from that cyan line to get the lower channel or the lower number. And that's how this thing was originally used. Now, along the way, Linda Radsky changed things. She introduced a newer version, which is what we almost all use today, and it's much more like a Bollinger Band. It's a volatility-based indicator using average true range to set the channel widths, although she still got the 10 SMA from the open high-low close divided by, or high-low close divided by 3. The reason that all of this matters is when you look at the TMV indicator, we need to know which one of these the TMV indicator is using. And it is also an older indicator. And it uses the original version, right? Not the Linda Radsky version. And that's why if you ever try to recreate the TMV on your own, how it might not have matched this. And if we want to build the TMV on a chart platform other than Thinkorswim, we would need to know this, right? So that we could replicate it. I don't think the TMV indicator is all over the place. You know, like if we're at Tasty Trades or if we're on TradingView, I'm not sure that we could find the TMV indicator, right? And this is very likely why, if you have tried to already duplicate it and you're not getting the same results, because that Keltner channel needs to be adjusted to the old version, right? So I just went ahead and made the old version. I made the adjustments so that it would do what it was supposed to do, the way it was originally intended to be made. And this is what we have, right? So there it is. Now on Thinkorswim, if you were to look up Keltner channels, it says that they are two volatility-based lines above and below a moving average. And while they do resemble Bollinger Bands, Keltner channels use the average true range. And again, this is just describing the modern version. But they do talk about how it's analyzed and how an analyst would read the Keltner channels on their chart. They're commonly used as a trend following indicator. Closing above the upper channel line is interpreted as a bullish signal. Now they use the word signal there, but they mean bullish trend. While closing below the lower channel is considered a bearish signal or a bearish trend. In a flat trend, channel lines can be interpreted as overbought and oversold, and it's in that environment where we sell the highs and we buy the lows. right? So if you've ever tried to use any sort of channel trend indicating strategy and they tell you to, sell the highs against the upper band and buy the lows along the lower band, that's the kind of strategy that you would want to use when we're in a range bound market. But it's not what you would want to use if we're in a trending market, right? And that's why if you've tried to run that strategy and you got ran over and you decided maybe you didn't like it, it was probably because you were using it in the wrong environment, right? Or in the wrong conditions. Like most indicators, the Keltner channel has specific functions for certain kind of markets. So when we are trending, we use it one way, and when we're not trending, we use it another way. All of this becomes really important when we go back to the TMV indicator. One last note, and this is again from Thinkorswim. When applying Keltner channels, consider using momentum indicators along with them in order to evaluate how strong the trend is. The reason they say that is they will define a trend as soon as price breaks out of the Keltner channels. But we know from experience that price can break out of the Keltner channels and come right back in again. So just because we broke out of it doesn't mean the trend is there, or it doesn't mean that the trend is very strong, where we might break out of it 1, 2, 3 days and then still fall right back in again. So that's why they say consider using momentum indicators so that you can gauge the strength of that trend. One of these tools would define the trend or classify price in a trend, and then your momentum tool would define how strong it is. So let's go back to the TMV indicator. Trend direction is defined using location of price relative to modified Keltner channels. And you can see the little extra note here where they do say it's a modified version and they're using typical price. And then they're also using the highs and lows are based on a high-low range, right? So the high level and the low level. They're using the old version of the Keltner channels. When it mentioned using a momentum indicator to measure the strength of the trend, on the TMV, the trend strength is identified by rising or falling ADX levels. That's what they decided to use. It's not a perfect science, right? If you wanted to build your own tool, something maybe kind of like the TMV, but using your own indicators, you would want one of those indicators to define what the market is in, a range-bound market or a trending market. And then you would want one of those indicators to measure that trend so that if we are trending, you would have some way to quantify that strength. There's a lot of different momentum indicators out there, and there's certainly a lot of indicators that will define trend for us, right? So, there's certainly different ways to go. If you're interested in what they have, you can use the studies button. So if we come up here and we go to studies, if you look at all the studies out there, we can actually go to an individual thing, right? If we want momentum, there's momentum from A to Z. And as you can see, there's a lot of momentum indicators out there. So that's one way to go. And if we want, crossover indicators or market strength indicators, so many different ones, right? Volatility. This is how you can find them classified into groups so that you know what group your indicator belongs to. Also, of course, just reading the description. So again, this video is to go with the TMV series so that when we're getting ready to modify the TMV and make it something more modern and user-friendly, that we'll all be on the same page about what we want to change and why we want to change it. Now, when it comes to the Keltner channels here, do we really want to change it? Let's put the old ones back on. So or excuse me, let's put the new ones on, because right now these yellow ones, that's the old school version. Here's the newer version. And I'm going to zoom in a little. I know that it's very likely uncomfortable. Let's see if we can get a cloud. You know what? I'm going to pause the screen here, and I'm going to make one of these a cloud, just so that it will be easier for us to visualize one versus the other. I turned the old school indicator into a cloud, and I left the original, the one that Thinkorswim gives us, I left it as lines. So now that we have both of them on the screen, we can kind of evaluate which one seems like a better one. Now remember, we want to avoid fake outs, right? We don't want to get those ones that just wick out for a day or two and then it drops right back in again. And if you look at the cloud one, the one that the TMV is using, that's exactly what we see. A bunch of false breakouts, and it falls back down, and it breaks out again, and it falls back down. I'm not quite sure that I'm interested in using that one, right? I think that the more modern version would be much more comfortable, much more accessible, right? And I think that this is one of the changes that we're going to make. So the good thing is, if you're looking to replicate the TMV on your own charting platform, you don't have to worry about trying to rebuild the Keltner channels into the old version, right? You can just use the more modern, normal version that that Linda Radsky put together, right? And I think that's probably what most charting platforms today is using, is Linda Radsky's version. All right, so hopefully this video, it kind of keeps you up to date with what we're working on for the TMV, and gives you a little insight about how the Keltner channel is used within the TMV, what it's doing with it, right? And I don't know if we could perhaps get more out of it, but honestly, the only thing the TMV is using the Keltners for is just to define whether or not we are in a trend. That's it. I appreciate your time, everybody. I look forward to seeing you at the next video.